Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Friday, October 30th. One of the things we were discussing is, how the market reacts to information. And what the market is looking for is it's looking for excuses. It always does. And fundamentals provide the excuse or a way to build perception. Now, what we want to look at today, and obviously there's some news that came out in yesterday's action that was positive. They felt that the GDP is a good sign in terms of how it's behaving overall. We also have some numbers coming out today, and it's going to be important to see how we go into the weekend. Remember our conversation last week. As we were making new highs, again from a Dan perspective, we're seeing selling up here. This last Friday's close just did not get it done. And the result is we saw how the market behaved this coming week. Remember I said that would set the tone. We're kind of in the same boat. We need to see some follow through here. And that's what we're looking for. How does the market absorb this information? In the S&P, this market, here's a sell point and here's a buy point, and you can see the market traded back through that buy point. So that difference here would be $300. Again, just to give you an idea of what the values are when you see these markets moving back and forth. Now, unchanged to higher. Can we get that? Can we get that confident close going into the weekend? Well, let's check out the dollar. When you see these green candles across the board here, what does that mean to us? Is the dollar getting stronger? Is the dollar getting weaker? Well, when you see these green candles, it means these currencies are getting stronger. The US dollar is getting weaker. Weaker. And what are we looking for? Well, we're looking for unchanged to higher in these markets. We want to see that positive close, just like we're looking at for in the stocks. The other issue is these were sell points, and now we went through that buy point. So in the euro, to give you an idea, that difference between those lines there is $1,125. In the Swissy, it's $625. And our friend Mr. Yen, this is the buy point right here, and then it came back through that. Seeing yesterday's action on that sell point, and that economic value of that move is $750 is the dollar value of that per contract. The Aussie dollar also came back through that sell point. That was 10 ticks or $100. And anything else I should be telling you? Nope, that's it. Canadian dollar is knocking on the door here, but it hasn't gone through it as far as that buy point there. So we're looking for a continued weakness in the dollar in today's action. Interest rates, well, we saw how interest rates reacted when the market was going down. People would circulate at that point, they would say the market's going to flight to quality as people go to interest rate markets and take their money out of the stock market. And today that would have been reversed. They're selling those positions, and now they'd be putting that money back in the stock market. Well, what we'd want to see if we're going to see consistency here is we want to see this market moving lower. Based upon a stronger close in the stock market. And we also, in this sense, would have taken out some positions. See, here is a buy point. We traded through that sell point, so that would have closed out that long position if someone had that. And that was $250 here. The same kind of thing happened in bonds, and that was $375 as the dollar value of that move. So, can we get this movement down? That's what we're looking for now. We're looking for unchanged to lower in these interest rate markets. The metals. Well, when the stock market's doing this turn, it seems like we're also seeing that kind of behavior in the metals. Gold traded back through that buy point, and here was the sell point that would have originated that short position. That would be the concept. That's $1,700 per contract is the dollar value of that move. We are looking for unchanged to higher there, just like we are in those other complexes. Same thing for silver. The dollar value of this move is $1,000 per contract, and we're looking for unchanged to higher. And look at our friend Mr. Copper. I got to tell you, I just really feel bullish on this market. And our GDP should imply this stronger prices, but it's got a lot of work to do here to get through that. That's not a layup type trade here, by the way, but it sure is headed in the right direction. It met magnitude objectives. It's interesting. And in the energy markets, well, we can see in crude oil, it also traded right back up here. It nice little push to the upside, reached a magnitude objective as well, and we're looking for unchanged to higher in that market. So that same kind of behavior across the board. Remember, we talked about yesterday that if we got above 78.50, we expected a pop, and this behaved properly. Now, natural gas, we're looking at the December contract. That's what that Z represents, by the way. And it looks like it is slowing down. It is a loss of momentum type setup. It is rejecting lower prices. I just don't know if there's enough energy behind, hey, no pun intended, energy behind this to really get it going. But we'll see. And talking about energy, look at beans. We're seeing the grains give us a little bit of a rally up there. We were talking about structurally how these things were slowing down in the day before yesterday's action. And also, a weaker dollar makes these products more attractive offshore for us. And maybe that's part of what we're seeing here happen as well. But the difference between that sell point and that buy point in corn and in beans is $850. In corn, that would be $650. And wheat, this has not crossed through that buy point. So it's kind of waiting to see what happens here. So we are looking for upward pressure in these markets. I think we need to be guarded about that, though. But we'll see what happens here. Interesting day coming up. Can't wait to see what happens. I hope you have a wonderful weekend. I look forward to being with you on the other side. And in the meantime, take care.